Good afternoon, everyone, and welcome to our December Hot Stock Panels. 7 hot stocks for moving average setups. Good afternoon, VV Nation. If you can hear me loud and clear, please type in the affirmative, preferably with VV Nation, and let me know that we are coming across your microphones or your speakers loud and clear. My name is Glenn Tompkins, Senior Instructor here at VectorVest. My pleasure to host this hot stock panel that we normally do every month. We did take off last month, but this month we're back here live and strong and ready to rock and roll. And I think that this hot stock panel is ideally suited to more of the trader. And, talking about moving averages, amongst other things, moving averages are a crucial way to help you to pinpoint getting into a trade and actually pinpoint when to get out of a trade. Especially knowing as a VectorVest subscriber, our MTI is at a level of right now 1.67. The market's looking for a top. And this is most likely more of a trader's market, even though the market's going higher. I understand that. The market's going higher, but at some point in time, the market's going to pull back. It's not if it pulls back. It's going to be a matter of when it pulls back. So moving averages can definitely get you in to take advantage of a move. And before or as a market could be pulling back, you can still use those same moving averages as a gauge to get out of those stocks as well. So as I mentioned, I am your host, but today I am joined by 2 of my esteemed colleagues. Well, one is more esteemed than the other, and I'm going to leave it up. Neither one of them knows which one is more esteemed than the other. Doesn't matter. But I've got, Patrick is pointing to himself, but I've got Jerry D'Ambrosio, who's the manager of educational content. Wave, Jerry, so they can see you. And then I've got Patrick France, who is, like myself, a senior instructor, and he also supports the VectorVest mobile app as well. So I got 2 good people here with me, and Jerry D'Ambrosio is more of our tech guy in the educational team. So he's got a lot of great content for webcasts and for paid courses as well. So he's really good at that. Patrick and I will just sit and bask in his glory and his aura of his expertise. That's what we'll do. Right, Patrick?
That's right.
There you go. So Jerry's the guy when it comes down to that. And that's why he's got that big smile on his face. He's sitting there going, oh, yeah, I'm the guy. It's all right. It's all right. So we're going to have a lot of fun, but it's going to be very informational. And you guys may pick up some things. You guys may definitely pick up some things in regards to how to trade utilizing moving average setups. We're going to get right into it, all right? If you like what you see, especially if you're brand new to our YouTube channel, if you like what you see, by all means, please subscribe to the channel. If you like the content that we're going to be giving along the presentation, don't forget to hit the like button. All right, let's hit the like button and join the channel. I love the way that we don't force people to do anything. It's all up to you. So make it happen. All right, so let's start off with my picks. All right, we're going to give you 7 stocks. I'm going to have 2. Patrick's going to have 2. Jerry's going to have 3. But we're going to start off right here in the software. Normally, when we do a presentation, we start off a little bit of market overview, but I'm not going to do that today. We're going to get right into what we're going on into. All right, so I've got these stocks set up in a watch list. I'm going to go to the Viewers tab, and I am going to go over to the watch list viewer, and I am going to go down to Hot Stock Panel. All right, these are where all of our hot stock panels have their watch lists. I'll find for today, which is 12/1. And here's the 7 stocks that we'll go over. All right, and when you look at a list of VectorVest stocks, and this is for the benefit of the people who are brand new to the software, when you open up a listing of stocks in the software, you're always going to see that they're sorted by our master indicator, VST, or value, safety, and timing. So the stocks that have the best combination of relative value, relative safety, and relative timing will be at the top of the list, and the ones that have the worst combination will be at the bottom of the list. Now, the interesting point of this, we like to use this from an investing perspective. But understand that we're going to be looking at moving average setups This is going to be more of a technical trade. It could be more considered to be more of an aggressive trade. So even though I like that it's set up by VST, our master indicator, as we go through these trades, understand, and my two colleagues will agree with me, that these are more trade opportunities than anything else. All right? Could these be longer term investments, depending on what you're using to get out of them? The answer to that could be yes. But getting in and getting out and making money and doing so consistently is the crux of what we're going to talk about today. All right, so here's the 7 stocks. My 2 stocks happen to be Altimmune and let's just move this over so you can see the names, the Nautilus Group, NLS. So I know that, how do I get to these stocks? All right, and I'm going to start off by putting some context behind how I came up with these stocks. First thing, from a moving average perspective, I like using the 3 and the 8 exponential moving averages. That's me, and that's something that we do in our jockey club, which is our trading room, and they can serve the purposes from either a short-term perspective or a swing trade perspective. They can do either or, whether it's on minute bars or on end-of-day bars. I believe the 3 and the 8 does a good job of finding stocks that are trending and keeping you in those trending stocks longer. So that was the first thing that I looked at to try to find these stocks. The next thing that I looked at is, well, I know that these are trades, but why not use a VectorVest indicator relative value? The stock's upside potential as compared to an alternative investment in AAA corporate bond. Relative value on that scale, that VectorVest scaling between 0 and 2, above 1 is favorable. Above 1, like an Altimmune, a relative value at 1.15, we're saying that over the next 1 to 3 years, this stock, Altimmune, should outperform a AAA corporate bond by 15%. Should. So that tells me that the stock has got good upside capability. Nautilus Group's got an RV of 1.57. That should outperform AAA corporate bond by 57% over the next 1 to 3 years. So even though I started off with a 3 and an 8 exponential moving average crossover, I wanted to put some more confidence behind the trade still moving in my direction. All right, so I did that, and putting those two together, I'm not going to look at the other indicators just quite yet. All I really want to do is look at the graph, but something else. Earnings growth. Earnings is the engine that drives the stock's price higher. How about earnings growth on both of these stocks are double digits? I know that Altimmune, being a pharmaceutical, it's got a negative earnings per share. But it tells me that as a pharmaceutical, they're growing their earnings. They'll get out of that negative earnings per share rather quickly at the rate of which they're growing their earnings. So, all right, now that's how I got to the stocks. And I also wanted to make sure that the RV was at 1.25 or higher. It's pulled back since I picked them up, which is fine. All right, but the stock is still moving up. All right, now, as I pull these up on a graph, view the stock graph, a couple of things that I looked for. My graph setup is looking at the 3 and the 8, and I'm going to put this on an end-of-day graph on a 1-month graph. I'll actually put it on a 3-month graph. All right, I look at Altimmune, and I liked that the 3 and the 8 had crossed a couple of days ago. All right, actually it crossed 1, 2, 3 days ago. What else happened? We have another indicator within VectorVest, only found in VectorVest, called RT, relative timing. It looks at the stock's short-term price trend. Based on that scale between 0 and 2, when RT goes above 1, the stock is officially in an uptrend. Now, if I'm looking at a 3-month graph, look at that RT indicator. I know this is about moving averages, but I liked that I wanted to use a technical indicator only found in VectorVest to help back up the decision to pull the trigger or think about Altimmune. Now, you'll see today's activity. Let me take off today's activity. A big give back day. But the stock did go across a level of resistance sitting here at about $11.81 after the 3-8 cross. And I'm going to put another moving average up here. Another confirming moving average. Let's change the style. Make that a little darker. Another moving average for a midterm moving average, the stock's price was also above a 20 exponential moving average. So I used the 3 and the 8 to find the stock. I'm using the 20 as a means to confirm the stock along with RT. Stock's price moved up nicely today, a lot of give back. The stock's price did gap up higher. Now, if I'm in this stock, what do? Well, if I'm currently in the stock, I've got to have a place to get out. I would probably look at the same 3 and 8 as a way to get out, possibly, or look at the prior day's high as a way to get out. Remember, this is still a shorter term pick. A lot of give back today, so I probably wouldn't pull the trigger on it today, even though the stock's price went up on good volume. Volume is rising, RT is rising. I'm thinking that could be some profit taking. Yesterday's close, let's go put on a date line. Yesterday's close was sitting at 12.23. The high today went up to $15.37. That's a big jump up in the stock's price. The stock did pull back. There's no ifs, ands, or buts about it. The stock did pull back. Would I get into it? If I'm in it now, because if I bought it earlier today, what would I do? I'd leave it alone. All right, I'd let and look at my prior day's high as a level probably for me to get out, or give the stock a little bit more room by looking at the 3 and the 8. The stock's price went up on good volume. The stock's price really went up on good volume. I've got a little bit of a doji or indecision today, but volume is conviction. Volume is definitely conviction. So if I'm not in it, I'm going to wait. Another thing that I would look for possibly was to see if it breaks above, if I'm not in it, breaks above that level of resistance. I do like the moving average crossovers, followed with RT, followed with volume. Now I just need to sit back a little bit and let the trade come to me if I'm not already in it. All right, so now I'm going to let Jerry and Patrick chime in on what they think about the pick. Starting off, I'll start with you, Jerry, since you're sitting in the middle.
Sure. I think it's a good pick. It's actually, before I decided on mine, I was going to choose ALT for myself until Glenn told me that he chose it. So I really like the pick. It also just recently crossed above its 50-day moving average. So you're getting a lot of moving average crossovers, price crossing above the 20, crossing above the 50. It's been in a pretty long-term downtrend. I'm looking at my other monitor here. If we just go to a 1-year chart.
All right, I got you. Hold on. I'm putting on that 50 as well.
Sure.
There's the 50.
There's the 50.
Change the style. Let's make that a little darker.
Yeah.
So all the moving averages across the board look good. There's your 1 year.
It's been a long-term downtrend. You can also see how that 50-day moving average, if take off the other moving averages, serving as nice resistance, right? Over the last 3 months or so, price below it, but retracing from it from underneath. So you get a nice bullish crossover over the last couple of days. So really like the pick, really strong volume, RT trending higher, just crossed above 1. So one of my favorites that I was looking at earlier today as well.
All right, Patrick?
I'm going to say I don't like the pick.
Well, you can get off my stream right now. You're done. Okay. Go ahead.
If you zoom back into, let's say a 3-month, if you look back around the 13th of October, you see the same kind of pattern happening right when it bounced up and hit support. And then it sold off. There's a lot of volume, but you have to consider a lot of that volume is probably made up of profit taking. A lot of people selling their shares, which is creating some of that volume. If it could hold towards the highs today, I would completely reverse my call and say I like it. But right now with it showing a doji and it's, in the last 3 months, every time it's had a doji like that, it tends to pull back right afterwards. I'd still be a little careful or a little hesitant with it. Maybe at the $12 price range when it comes down to that support floor. But, that $13.58 all the way down to $12, $1.50 a share on a $12 stock, that's a pretty big move that you'd have to sit through before you even, start to see if it's going to hold or not.
I'm going to counter that because doji pullback, Doji, notice that, and Jerry brought up a good point. Notice that the 50-day moving average served as a really good level of resistance in all of these cases. This is the first time in the last 3 months where it actually broke above the 50. So from that perspective, it broke above the 3 and the 8, it broke above the 20, and it broke above the 50. Put all of that into, and this is looking at, moving average setups. I think that presents a good buying opportunity. Now, could it pull back? Answer to that is absolutely, it could. But this is the first time over that 3-month period where this kind of phenomenon has happened. Has happened with the stock at this particular point in time. So I counter what you say from that perspective.
Buy stop limit order would be the way to go.
Okay. Jerry, you look like you were going to say something else.
I was just about to. So if you think about it in terms of price action today, sure, we may see a retest of yesterday's high in the near term, but the analysis that we're doing and Glenn is doing is using moving average crossovers. So has the direction of price changed? And looking at the moving averages that we've been looking at, it looks to be that direction has truly changed. Now, what happens today, and there is a bit of profit taking today, I still think shorter term, maybe not today, maybe you wait for a little bit more confirmation tomorrow. But in terms of trend change, we have that here with the moving average crossovers. Yeah, today's a profit taking day. I still like it in terms of all those moving average crosses that we've gotten.
Yeah, I do. So, Patrick, you're outnumbered, so hush. All right. So, all right, let me go to my second stock. Patrick, I'm only messing with you. Let's go to my second stock, which is NLS, all right, Nautilus Group. Now, this stock caught my attention because, again, it crossed the 3 and the 8. Oh, and I got to do something. No, okay, I do have to do something. We do have a giveaway today. Joey was letting me know. We're going to be giving here we go, keyword mug. Got to type mug in the room. We're going to give a mug away at 2:45. We're going to give away a mug at 2:45. No, Monty, it's not VV Nation right now. You got to type in mug. And we're going to watch mug go across the room. If you want to throw a VV Nation in there, you can. That's not going to get you the mug, though. All right, so I figured fuzzy pick 2. Well, Joey, and if there's any technical issues, that's what we got Jerry for. That's what we got Joey for. He got you. All right, so now let's go into my next pick. Next pick again, NLS. The stock was a stock that hit the criteria of my 3 and the 8 crossing. And let's go take the 3 and the 8 off. Let's go put on the 20. All right, I'm going to move this up just so I can put that up there. It also crossed my 20-day exponential moving average when I ran it. Now, interesting that it was my pick because I liked prior activity on the stock, and I was like, hey, maybe bouncing off this level of support, breaking above not only the 3 and the 8, but the 20, this could be a buying opportunity. Aha! What do I see now? I see a big down candle. I'm not gonna, actually, I could call that a dark cloud cover, Jerry. It's more than halfway down.
Yeah, I'm not sure if today's open was higher than yesterday's high. I'm not sure if that.
I don't think it was. I don't think it was higher than yesterday's high. So that would stop it from being a dark cloud cover.
Yeah,
it's definitely a bearish candle. Mm-hmm. All right, it definitely is a bearish candle. So even though I found it and I was looking at it, now as I look at it, today's action, I'm probably not as bullish as I was on it. So yeah, trying to give you 7 stocks to look at, but this is the beautiful thing about behind making sure that you got confirmation before you pull the trigger. Again, I like the prior activity that happened along this 3-month time period. The pullbacks happened. It found a level of support. When I did the search, it met the criteria crossing the 3 above the 8, and it is above the 20. But with today's activity, I would hold off on this stock. All right, I would hold off on this stock. So this is a stock that I would put on my watch list, but I would wait for the stock or the trade to come back to me right now. And overall, even if it did go above, and let's say today was a buy opportunity, if it were a buy opportunity, that high would be my level of selling the stock. That would be my price target, sitting at about 28.43. So I would have some good opportunity to make money. But with today's activity not confirming when I first found it, I would wait on that trade. Jerry, what do you got to say?
Yeah, I agree. So if you're using yesterday's breakout candle as your confirmation or as your trigger candle, you're looking for price to go above yesterday's high. It didn't go above yesterday's high today, so you're kind of in limbo in terms of entering the trade. Glenn, go to a 6-month chart.
Actually, you can. You got control. You can do that.
Yeah. So what I'm seeing here is this level of support. I know it's not exact, but where did it stop? Kind of like in the same level that you had some congestion in this area as well. So this is a nice spring trade where you're in an uptrend and you get a pullback towards a prior swing high or a prior level of resistance. It stops, generally speaking, in that area. Like Glenn said, it's kind of holding nice support here. I don't hate it. I just would love to, I'd love to wait for a little bit more price confirmation. Right. So today's high was, what is that? I can't read that.
21.53.
And yesterday's high was
21.48.
Yeah, so real close there. So 21.53 is what I would use as confirmation. It's a down day today. Wouldn't enter it. I don't like the trend of RT either, but with a push higher, RT could very well cross back above one and make new highs. But today's day kind of ruins the RT movement there. As you can see, it dipped below. So nice cross above the 20-day moving average. Bullish, of course. Retracing off of support, retracing off of a prior resistance level, a prior resistance level when it was resistance back here. So not terrible.
Before I get Patrick to come in, Boston Bean says, why not change price from candlesticks to open, high, low, close so folks can see what you're talking about? Not everyone's candlestick smart. I think for the most part, most people, and Jerry, back me up on this or not, I think most people use candlesticks more so than open, high, low, close, or am I wrong?
It's hard to say.
I guess it's a personal preference.
Yeah.
I think it's a personal preference. Leonardo, MACD, we could put that on, but I'm going to stick to what everyone here is set up for today. And guess what? Because you are a subscriber to the software, you can add a lot more to what you do to make this right for you. Understand there's 3 personalities in here presenting, and we're going to stand fast on the strength of their talents in regards to what we're looking for. So I'm putting that. You guys are putting a bunch of technical indicators in here. Hold on to them. All right. So Patrick, you will analyze this along, and then you will go next.
All right. So yeah, I like this one. I like that. It had a big gap down. It was falling for a little bit, but that support floor right below 18 seems to be holding. It's that downtrend is starting to dissipate. You're finally taking out the previous high before the last pullback. I like that. It's pulling back a little bit here today, but it's coming off of those lows, which is nice. Tells us people are, the mentality is people are buying that dip here today. I'd like to see it get above that green level of resistance. But once you get above that, that would be, you get above it or get above that, get a nice buy entry price in there, and use that as a stop right there for yourself.
All right. So those are my 2 stocks. All right. And opportunities, you can take them as you see them, but at least giving an understanding of why they were there, why I saw what I saw, and what I'm looking for can at least help some of you. And a lot of people are adding in other technical indicators. By all means, if it fits you, you can do so. All right. With that, Patrick, it's on you, buddy.
All right. So you want to pull up my 2 stocks here? Why I introduce myself?
Sure.
So welcome, everybody. My name is Patrick France. I'm a senior instructor here at VectorVest. Been here for about 10 years now, specifically focusing on our mobile application. Every Thursday, typically I go live on our Facebook page. So if you're new here or you're not already familiar with that, head over to Facebook, search for VectorVest, like the page, turn on notifications, because we do a free live stream every single Thursday at around 11 a.m. Eastern, where we talk about, different trading techniques, new functionalities or new features, all of that within the mobile app. So great for on the go, especially, if you're going to be traveling or whatever it may be. We teach different little tips and tricks on how to make the app really fit everybody's needs there. So my two stocks here today are going to be AIV and EXPD. You can see I have one of the very few buy-rated stocks currently in the list that we're looking at here today. Also have one of the highest RT stocks that we're looking at here today. If you're going to be a trader, if you're going to be looking for short-term gains, momentum is definitely going to be key. My other pick, EXPD, had a little bit higher RT earlier today. But I like the fundamentals a little bit better, so that offset the lower RT. And as we take a look at the graph, you'll see that it does have that opportunity to see that RT really starting to pick up. So I see we got EXPD as our first stock. What we're going to do is we're going to change the layout to the Star Search layout. If you're not familiar with it, it's a layout that we've had for quite some time. It was founded by Dr. Barbara Starr. Very smart lady and very knowledgeable in the markets. Jerry probably knows more than I do about her, so if he wants to talk a little bit about it in a moment, he most certainly can. But what we're essentially looking at, it's not necessarily the basic definition of a moving average like we just saw with Glenn's. What we're looking at here is two sets of Bollinger Bands. Bollinger Bands, if you're not familiar with them, are based upon exponential moving averages. So both of these, I believe, are based upon a 20-period exponential moving average. And then they move them, they expand them out from that moving average based upon standard deviations. So what we're looking at is the outside band is based upon a 3 standard deviation move from that 20 EMA. And the inner bands is based upon a 1 standard deviation move from that 20-period EMA. And at the bottom, we have DPO. It's a great indicator. Really, really good for short-term momentum to identify new uptrend starting, new momentum starting. Great for divergences, which if anybody knows or if anybody's familiar with me in the past knows I really like trading divergences. So I really like DPO, and adding them together really gives you a lot of insight on what's going on in the stock. So looking at EXPD, what we're looking for is the two sets of Bollinger Bands to start converging and then start separating. Well, they were separating here earlier, but you're not only looking for that, you're looking for the DPOs to cross above 0, which the 20 or the blue one, I believe, is just right at that 0 line, maybe a little bit above it. The red one clearly is above it. So that's showing that a new momentum is starting to emerge. And then you're looking for, the best way to classify the Bollinger Bands is like the driving on the highway. You have 3 lanes here. You have the slow lane at the very bottom. You have the middle lane in the middle, obviously, and then you have the fast lane at the top. So everybody, if you want quick gains, you want to go faster. So what you're looking for is a stock to move from the middle lane into that fast lane, essentially. As we can see, we were above it in that fast lane here today, but we started pulling back a little bit throughout the latter half of the session so far. So what I'm really looking for is follow through tomorrow, or that it can stay in that upper or in the fast lane, essentially, and that we see the DPOs continuing to pick up, showing short-term momentum still building up. I see Mark's asking why 2 DPOs, because they're looking at 2 different periods, a 9-day and a 20-day. One's a little bit faster, one's going to be a little bit slower, to give you an idea on the momentum of the stock from 2 different perspectives there. But looking at it, though, I'd like to see those bands, or the outer bands, start to expand here going forward over the next couple of days. And I'd like to see price really start to emerge as the winner in that fast lane, essentially, as we move forward over the next few days throughout the market. You see it. You saw it. If you go back even to a 6-month graph, you can see this stock has a lot of consistent history. Every time it's got into that fast lane, it's made significant gains and great runs that could easily be capitalized upon from any trader. So this was my first pick of the day. Is going to be EXPD, mainly because it's starting to get in that fast lane, and if history has any way of repeating itself, most likely we can see some new momentum starting to pick up here very soon. So that's going to be my first pick for the day.
All right. Well, I'm going to add that I like the squeeze with the Bollinger Bands. It's just leveling out right now, moving a tad bit sideways. And I'm with you. I'd like to see that DPO 20 get above 1. But you know what I do like about it as I look at it? Look at the trend on the DPO 20 is trending higher. I'd like to see it break above. The DPO 9, the faster one, which is going to have more gyrations, is just around that zero line, but staying above. I'd like to see, and if I could draw a freehand line, I'd like to see it break out of its downtrend as well. And I think that as it goes higher, see that little downtrend on the DPO 9? I'd like to see it break up above that as well as the DPO 20 break above. But it's setting up. This was all of and I like the idea that this was a different way of using moving averages, using the DPO. So moving averages don't always have to be solid, 8 and 20 and this and that. These are moving averages incorporated within the Bollinger Band. So that was a different take on still using moving averages. And, the alligator jaws. I want to see the alligator jaws. I want to see the two moving averages, really, the outer band start spreading apart. Jerry?
Yeah, I like it. And I'm sure earlier today when Patrick picked it, price was well into that fast lane.
Yeah, it looked like it.
Back. Yeah, you could see it's pulled back off of the high. I'm sure the DPO was above 0 too. So an entry for me would just be, a rally today to end the session, or as long as price stays in that fast lane tomorrow, I'm not going to really need price to go above today's high tomorrow for confirmation. Just let it stay just above today's close. Let it reside in the fast lane. That Bollinger Band squeeze represents, rather lower volatility. And the idea is once price enters into the fast lane, you're likely going to get a pop in volatility, increase in volatility. You can see, when the bands expand historically, price rides that left lane nicely. So you're getting, increased volatility. Price is riding that fast lane. So I like the pick.
Okay. Patrick, here's your next stock, bro.
All right.
Hold on, I'm working on it. There you go. Okay.
And then AIV, a little bit different, but as you can see, same setup. If you guys hadn't guessed it yet, all of my picks today came from the Star Search layout, or the Star Search itself in the Unisearch. That can be found in the Pro Trader folder at the very bottom. But AIV was another one. What I was looking for is, a stock that had pretty low volatility, setting up for a pullback recently to get a little bit better of a price entry point. But this one, is moving sideways, started pulling back, gapped up big here today, and is not only starting to see the expansion in the Bollinger Bands. You're seeing the DPOs picking up nicely. Ever since I picked this, it's gone up nicely here again today. But it's getting outside of that sideways action we were seeing throughout, when is that? July or so, July, August, coming into September. You start to notice that we're above that. If you drew a line, created a level of resistance, you can see we're definitely out of that level here today. And maybe tomorrow get some follow through that would give even more confirmation. But I definitely like the way that this is starting to expand. It's in an area that's, commonly overlooked recently with all the runs that we've seen in technology, biotech, those types of stocks. So it's a little bit different of an area of the market that we haven't seen quite a lot of movement out of recently. Yes, it is at the upper extreme on that top band there. So if you're nervous about the big gap up, worried about it pulling back, a good way of keeping yourself protected would be by, putting a line in the sand at the low of today's candle if you don't want to let it come all the way back to get out of that fast lane. So you could do that. That would be, a fairly conservative way of minimizing any loss or protecting yourself without having the stock, have to pull back significantly before you get that exit signal with it. But this would be more of an aggressive one. The fact that it comes out of a REIT, is definitely unique. Usually you don't see these types of big moves coming out of this area of the market. But hey, if it presents itself, it has a good setup. You're starting to see the jaws expanding, if you will. Has potential to continue to move higher, and DPO and everything else is confirming it.
I like the move. Both DPOs shot up like a bat out of Hades. And the thing that does scare me is I like riding in the fast lane. Right now, it's riding in the shoulder. And that's the scary part. That's the only scary part. It's riding outside of the band. The gap, the DPOs, everything is right in line. And, the squishing of the bars sitting in the middle. Sitting here and the stock was moving sideways and the gap up. That's my only concern is outside of the bar, outside of the band. Let's go see what happens tomorrow, if it's still going to continue to stay in the fast lane, or if it stays in the shoulder, most likely it's going to have an opportunity to pull back. Notice that most of the times when we're in the fast lane, we stay in the fast lane without getting out of the fast lane. Let me put this on a 1-year graph just to see. In the fast lane without getting out of the fast lane. So what was your other stock? See how even when it rode the fast lane, it stayed within the band. So for this one, it's just a little different. That's a big, ginormous move. And that's the only thing that concerns me. Other than that, I like it. But that's the only, dang it, I hate when Joey does this. That's the only thing that I dislike is outside of the band.
So AIV is more like the motorcycle driving in the fast lane. The EXPD is more like the SUV driving in the fast lane. One's a little crazier than the other, but they both are moving pretty good.
That made absolutely no sense to me. All right. So go ahead, Jerry. What do you think?
I agree with you, Glenn. I think you can almost bet that in the next day or two, that stock's price is gonna come revert back to the mean, right? Because Bollinger Bands are based on moving averages, and when you get a price above or below a particular band, like we saw in October, right? The end of October when price pierced the lower band, you got a quick move right back into the middle there. So I don't think price is going to ride in that lane or in this kind of trajectory for too much longer. Likely going to get a pullback towards the center somewhere.
All right.
Yeah, Audrey says must have been some crazy news. I didn't hear any REIT news that would cause price to go from.
I'm with you.
I don't know.
Well,
yeah.
I was having a conversation with somebody about keep your eyes on REIT. Monty says Patrick mentioned Star Search within the Unisearch. I can't find it. Is it only accessible if you have ProTrader? And the answer to that is yes. Now, yes, but if I have the software, I can look at a Star Search layout without having ProTrader. But if Patrick found this by way of the Star Search Unisearch, yes, you have to have ProTrader in order to see that. So that's to answer your question, Monty. All right. I think I answered everybody's questions. Apartments and condos have concentrations of folks in CV19 area interest. I'm not sure what that's all about, Boston Beans, but it's okay. All right, Patrick, thank you for your 2 picks. That was both of your picks, right? Let me make sure.
Yep. Yes.
I didn't want to mess up. All right. Jerry, I'm going to close out of this graph, and then you've got your own mouse, so you go do your own thing.
Okay. Well, hello everybody.
Oh,
I'm Jerry D'Ambrosio. Yep.
Yeah, he's introducing. Sorry, Jerry. That was
okay.
Joey being Joey.
Well, hello everybody. I'm Jerry D'Ambrosio. I'm the manager of educational content with VectorVest. Over the years, I've developed and taught a lot of our swing trading, a lot of our short-term trading courses. We really hope to teach all investors about, a lot of different aspects of trading, whether it be options or retirement or swing trading. So we've kind of broken up into different factions of the education department. So I'm happy to be in that area, teaching folks how to capture gains a little bit more quickly. And that's part of our swing trading coaching group as well, which I'm a part facilitator of. Steve Chappell and I lead a Thursday afternoon swing trading coaching group where we go through a lot of the different techniques that we teach in a lot of our different courses, and a couple I'm going to show you guys here today. So 3 picks I have today: REGN, CTLT, and SAIL. All right, and just looking at our basic analysis here, REGN, undervalued, really good fundamentals. RT is a little low, 0.78, but we're going to take a look at the chart here in a moment. Earnings growth rate of 21%, good VST score. So this is really a fundamentally sound company, undervalued, good upside, safe investment. Now, CTLT and SAIL, a little bit different. CTLT is a little overvalued. Upside potential is about average, 0.98. It's a rather safe investment. You could see the earnings growth rate at 8% a year here. But SAIL is more, of a, I wouldn't say speculative, but more of an aggressive trade. It's really going to be based on the chart that we look at and, certain moving averages that we'll observe. And that's the reason why I picked that stock. But fundamentally, not that great. You could see RV less than 1, RS less than 1. It's a trade, though. It's got some pretty strong price momentum with an RT of 1.25. So let me graph them here. And just bear with me while I change our layout here. So I'm going to get rid of some of this stuff and just have price on for now. Let me get rid of the last close. And I'm going to add a few moving averages here. Okay, give me 1 second. Okay, so I'm going to add a 50-day moving average. I'm going to right click, go to add moving averages, simple. And I'm going to add a 40. I'm going to right click again, go to add moving average, simple. And I'm going to add another 40. And I'm going to change one of the 40s to a 50. And actually, I'm not going to take that, keep that moving average off. And I'm going to add 3 exponential moving averages. Okay, so I'm going to right click again, go exponential. And I'm going to select 10 3 times. So that's going to put 3 10-period exponential moving averages on my chart. Actually, it's going to put them in the field list at the bottom. And here is where I'm going to check all 3 boxes. I'm going to change one of the moving averages to a 13, the other to an 8, and the other to a 5. Okay, and I'm also going to put the RT on the bottom. So this is a technique that we will be teaching in our upcoming Mastering Moving Averages course. This is a course that Stan Heller and I will be teaching. Stan will be doing most of the core module work, and we're going to tag team together for the mastery sessions. But this is a moving average technique that Stan will be teaching. And let me just zoom in and talk about the setup. So the 3 exponential moving averages, the 5, the 8, and the 13 are really important for this setup. So what we've seen recently, I'm going to take off price actually, because we really don't need price when looking at this setup. So what we've had recently is it's called the EMA squeeze trade, or the EMA squeeze trading system. Basically what we've seen here, you can see the moving averages squeezing together. Price did just barely dip below the 50-day moving average, based nicely right at this level here. Hard to say what that is unless I draw a line. Right in that level here, you could see establish a nice base there. The moving average is squeezed tighter and tighter. Now what we're seeing is price pulling away from that 50-day moving average.
Hey, JD.
Yeah.
Real quick, your MA5 is a simple.
Oh, okay.
I just want you to know that. Whether it makes a
Appreciate it.
difference or not, I just wanted
It
you to know that
does.
it's a simple.
Okay, thank you. It's hard for me to see the screen.
That's all right. You need glasses. Just admit it.
Little blurry, but there you go. There's the expansion of those moving averages and the separation. You guys see that? You could see the squeeze of the moving averages, the 5, the 8, and the 13 converging towards each other. The squeeze happened right in this area here. Price started to pull away from the 50-day moving average, 5 above the 8, 8 above the 13, and the separation being created by those moving averages. I don't even need price on right now. It's because the separation of the moving averages, price above the 50-day moving average, and RT trending higher is the setup. Now we put price on just to see where our entry is going to be. And in this case, we're going to use the close of today. Wherever the close is, I need price to go above that level tomorrow before I take the trade. But it's a really nice move away from the 50. That squeeze is important of the moving averages. What's more important is the separation that's being created by those 3 moving averages. So this leg up that's just beginning appears to have some legs to it because you can see those moving averages are strengthening, rising. And what we will use to exit the trade is the 5, and it's a really simple exit. It's a really simple trading system. The 5-period moving average crossing below both, the 5-period EMA, the 5-day EMA crossing below both the 8-day EMA and the 13-day EMA. That is your exit here with this trading system. And if you just look back historically, here was our first possible entry. Okay. Let me just scroll over. Here was the squeeze. There was the consolidation after the down move. Whoops. The squeeze of the moving averages, and then make that the hard right edge. You can see the fanning. You can see the moving averages start to separate. You can see the RT trending higher. Price just recently crossed above that 50-day moving average. There's your initial entry there. So that would have been a good opportunity. Using the 5, staying above the 8 and the 13, you rode that trade for months, and there's a really nice gain there. Doesn't look like you exited. Whoops. Until this area right here, when the 5 crossed below the 8 and the 13. So I like the setup as of the hard right edge. Little resistance there, but you're getting a nice retracement off of that 50-day moving average and moving higher.
All right. So, the cool thing about this, too, is that everybody in this room trades a little differently. My entry, for me, for more confirmation, I know what he said and what he set up and what he's looking for to trigger. My goal, or what I would be looking for, is above that level of at least that body. That's a good level, and it's almost there. That's what I'd be looking for as an entry point, because it's sitting at a level of resistance right now. And I'd like to see it get above that level of about 48.62. But if you look back, the tape doesn't lie. That's a 6-month graph of that stock that did beautifully well, and could be giving you another opportunity to go in again. I would just be looking for that level. You can click on the horizontal. I would be just clicking on that level to get in. That's my only difference in opinion right there, is that level of resistance.
Mm-hmm.
Patrick?
I completely agree with what you just said. I would look for a breakout of that resistance just because it's so close to it, just for a little bit more confirmation. But yeah, everything's looking pretty good. That's
a good looking trade. That really, really is. That was almost as good as my trade, Jerry. But but that really is a good looking trade. All right.
Okay. I'm sorry. RGEN. I typed in the wrong symbol.
Oh, that was me. Okay. All right.
That's okay.
That was my fault, probably.
That's okay.
Okay.
All right. So let's see. Same setup, same type of trading system. So as far as I can see, the 5-day EMA, the 8, the 13. So I'm going to squeeze over to the hard right edge. I'm sorry, hold on. Let me change my layout here.
All right,
Okay,
Jerry, while you're setting that up, let me take this question real quick.
Sure.
Barclay says, so fundamentals do not matter with this system. Do you still wait for the stock to climb higher than yesterday high before you buy it? So Barclay, I set the stage about that earlier when we first started. This is more, these moving average setups is more of a trading technique. So, yeah, we look at a little bit of fundamental analysis, but notice that all of these trades are based off of moving averages. That's the whole purpose, and that is more of a technical type of a situation. So I wanted to answer that question. All right, Jerry, go ahead.
Okay, so here's RGEN. So what we're looking at is the 50-day moving average in green, the 150 in pink there, and stochastics down at the bottom. So with this setup, we look for a trending stock. So price needs to be above the 50 needs to be above the 150. If I take off price, another really important aspect here is that we want those moving averages to be separating. So we're looking at the hard right edge. This is the current time. You see the separation between those two moving averages. That's very important, indicating a strengthening trend, even though price has recently pulled back from a new high. So this is a dip buying system. We look for price to pull back towards the 50. We look for it to stay above the 50, and stochastics is our short-term entry indicator. When it goes from below 20 to above 20, that's our entry. And you can see it just recently crossed from below 20 to above 20. Could have got in maybe yesterday or even today with the crossover, but a nice retracement back towards the 50. You can see, do I see a bullish candlestick pattern? That is a bullish harami, which is a reversal pattern right at the 50. Nice follow through the next day. So this is a really good trade, picking up the dip. Just a couple of days off of the bottom. And let me just see when stochastics crossed. I can't read those numbers.
I'm checking. Right there, they're both below 20.
What about today? What about that day?
Then the K is above 20. So yeah.
Okay, perfect. So yesterday was your setup, and today was your entry. And as long as price went above yesterday's high, which it did today, that indicated an entry for this trade today. You're not too late. You're just getting started here with a nice retracement over the 50-day.
I got a question. With the trade set up the way that it is, and as quickly as it gets to oversold territory, would you use the high as a profit target, or if you got in now?
Yes, absolutely. Sure. The most recent swing high would be where I would put my initial profit target. So
excellent.
Well, a lot of what we've been doing in our Thursday coaching groups when we're trading these types of systems is using that most recent swing high, but taking half off. Literally sell half of your shares and leave the rest to run, and then use, if let's say price doesn't move much farther or at all above that most recent swing high, using either the previous day's low or recognizing a bearish candlestick reversal pattern. Maybe if price gets to that high, you might see stochastics enter into the overbought situation,
right,
and a bearish candlestick formation after taking half off. I'm going to take half off once it hits that most recent high.
Yeah.
Then I'm going to let the rest run, and then I'll use, some of those money management tactics again, like using previous day's low or bearish candlestick reversal patterns to manage the other half of the position.
All right. Before I bring Patrick in, another question: 500 SJF. To enter or exit, best chart time frame: 1 month, 5 day, 1 day, 1 hour. It all depends on your goal. If I'm day trading, I will look at 1 to 5 minute bars. If I'm trying to swing trade, I personally like to look at 3-month graphs. And the reason why is what happens every 3 months with a stock. Earnings. What's the biggest mover of a price of a stock? Earnings. So when I look at a 3-month graph, I know that earnings is somewhere in that 3-month view and should give me a better representation of what I'm looking at. And so I prefer a 3-month graph from a swing trade. If I'm a longer-term investor, I'm going to look at a 1 to 3. If I'm longer-term retirement, I'm going to look at a 1 to 3 year. So it all depends on what your goals are at the time of looking at the trade and what your goals are. All right, so that's to answer your question. Patrick, I need your input, buddy.
I like it. I like the fact that it's breaking that short-term downtrend. If you drew a trend line, yeah, it's going to be a steep one, but you're clearly breaking out of that. I like stochastics. Stochastics been one of my favorite technical indicators to use for years now. I like the setup. The fact that it's above the 50 and the 150 just adds, icing to the cake there.
There you go.
Yeah, so you're looking at those two moving averages and determining intermediate term uptrend and long-term uptrend. The stochastics going below 20 is your short-term pullback entry. That's kind of the signal that you're gonna use to pinpoint an entry. But the 50 and the 150 just serves as analysis. So above the 50, intermediate term uptrend, above the 150, long-term uptrend, and we're trying to buy the pullbacks. If price was below the 50 or below the 150 and I got a stochastics crossover, that's not a setup. You really want to look for a long-term uptrend, in the midst or just ending a short-term correction.
I want all of the new people out there to understand Jerry just showed 2 different techniques that he teaches. That's 2 different techniques that he just showed you. And something tells me that on his third stock, he might just show you a third different technique. I'm just guessing. I don't know for sure, but he did just show you 2 different techniques. All right. So, Jerry, don't let me down. Please show me a third technique.
You would be wrong.
Okay.
It's a similar here
Okay.
that I just showed you. So there's the separation between the 2 moving averages. We have the 50 and the 150. So this is the same setup, same trade that we just showed there. So if we look back here, there's your pullback towards the 50 above the 150. There's your stochastics crossing from below 20 to above 20. Right in this area here is your entry. I think if I pull this back a little further, right in this area here. So there's your pullback. So this was an emerging trend, right? This is in the beginning stages of this really nice run that the stock has been on for quite some time. So here we had a pullback towards the 50. We had it kiss the 50-day. The moving averages started to separate. That's when stochastics went from below 20 to above 20. So right in this area is where you would enter. And I would have stayed in this trade because price never closed below and never really fell below that 50-day moving average, which, is my exit criteria here. Either price closing below the 50-day moving average or the most recent swing high. So today's high, so we're actually seeing a little retest of that 50, right? So here was the kiss of the 50, little rally there off of the 50, and then over the last couple of days, a little pullback, a little retest of the 50-day moving average. Today's high, whatever price that is, if I just put my date line here, 96.81, that's my confirmation level for tomorrow. Price goes above 96.81. My initial profit target, I'm not going to be greedy and say all the way up here, right? I'm going to kind of split the difference here between these highs, maybe put it somewhere in this area here. Can't really read what price that is, but right in that area would be my initial profit objective. Price reaches that level, I'll take half off and use the same money management tactics that I went through earlier. Stochastics goes above 80. You're so fortunate, right? If you enter into a position when stochastics first crosses from below 20 to above 20, and then you're in it and it crosses and it reaches 80, you got a nice profit on your hands, and you want to protect those gains. You want to look at candlestick reversal patterns to help you identify when to exit the rest of the position. So that level there would be where my initial profit objective would be. And if ever, anytime I'm in the trade, price goes below that 50-day moving average, that is also kind of my line in the sand there as well.
Hey, Jerry.
Yeah.
Can you tell your settings for the stochastics? I see a lot of people questioning about it, and
Sure.
the image of you is blocking where that box would typically show.
Oh, okay, that's right. Yeah, so it's
okay.
a 14.3 slow stochastics. Those are just industry standards. So 14.3 slow stochastics. Thank you, Patrick.
Okay. I don't know what you. I lost it. I like the whole setup of the 50 and the 150. Those are your two moving averages. I like that idea. The medium term, the long term, and as the stock is pulling back, this gives you the opportunity. How many people have sat out here and said, "Man, I wish I could have bought when the stock was down this low and go back up"? I like the setup to get you into a stock that's exhibiting a pullback right now. If you look at the 3-month graph, 4-month graph, the stock's price is still slightly higher than it was 4 months ago. So the stock is still trending higher, even though it's got a little bit of a pullback. But using stochastics and using those two moving averages together, this is another stock you put in your watch list, getting ready to rock and roll with. Patrick?
I like the setup, but at the same time, every time I've ever seen or traded a stock that has that big red candle in the last month or so, I've never had great success with it. So that's kind of always been a red flag for me seeing that. And the fact that stochastics, I know we're waiting to see it cross above, but I've seen it, just ride below that oversold territory for a while. So I'd be a little skeptical. If I did take a trade like this, I would be extremely cautious and keep some really tight stops on it.
Yep. Right. Yep. So that 50-day is going to really protect you against further downside here. If you are a little concerned with recent price action, but that 50-day is going to be a nice floor for you.
And for everyone from a trade perspective, and I think that Patrick and Jerry can both agree with me, the biggest thing you want to prevent against is letting a loser become a big loser. That 50-day moving average really reins in your ability to stop the bleeding quick. All right, especially from a trade perspective. You guys agree with that?
Absolutely. Absolutely.
Well, yeah. I'm about to say, you could not just shake your head. You can say something, Patrick. Holy smokes.
Well, I think that's important to say, because with all of the trading systems, most of the trading systems that will ever teach you, any technical analysis system, it has all that built in. Where do you exit? Where do you enter? Where do you take profits? I know a lot of you traders out there have a hard time with that.
Yeah.
So all of the systems that we teach you in Trade Like a Pro and all of our other courses have pre-built. Okay, here's where you enter. Here's your confirmation level. If you're wrong, here's where you exit. Here's where you look to take profits. It kind of covers all your bases. So I'm not going to say you're not going to, because you can ignore the stop and just let the stock ride, right? And because you think it's going to continue to move higher, but at least you have that there to follow as a nice guide, where to exit.
And Patrick, thank you for answering some of these questions in here about what's going on. I still need to reiterate, this session of this hot stock panel is more for trading. Just in the name itself, with moving average setups, that should have told you that this was more of a trading hot stocks panel this month, specifically. And everything that we are showing is more from that perspective. Questions are coming up about how to run searches using those technical indicators. Yes, you have to have ProTrader in order to run those searches. But if you want to look at the technical indicators on a graph, you can do that without having ProTrader. All right, so if you want these searches, or the ability for Jerry to find a search like a stock like that, or for Patrick to go look and run a search like Star Search to find his stocks, or me building a search using a 3-8 exponential moving average crossover to find my stocks, all of those, you need to have ProTrader to do so. Yes, you do. And BM was hot over something, and I still don't know what it was hot over. Whatever it was, he was hot over it. But whatever. So anyway, I love helping everybody, but if you come, Joey's trying to keep me from taking all this stuff personally. I'm trying to keep it because I love the content that we give out, and I want to make sure that we get it across to you. Don't be afraid to ask your questions. We are doing the best that we can to answer as many of them as we possibly can. All right, Jerry, was that your last stock, or do you have another one?
I'm sorry? No, that was it.
That was it. All right, so just to let you know, the winner of the mug is Deborah Mitchell. Deborah, if you're here, type something in the room. Say hi. Say something. I don't care. Just say something.
You should use the email.
Oh, and do you need to email marketing@VectorVest.com? All right, let's see. Deborah, you here? Don't stress Glenn. We love all you guys. Thank you, Ebert. Deborah, you're here. All right, so Deborah, you need to send an email to marketing@VectorVest.com. Boston says, folks have procedures at work job that are written and need to be followed. VectorVest folks teach you how to have these procedures like your profession. The more you follow procedures, the more success. You know something? I like that statement because I think that, you know what Jerry showed? In those paid courses that he teaches, he puts together a plan. Right, Jerry?
Yep.
He shows you what a setup looks like. He shows you how to find the stocks. He shows you how to set up, how to trigger, how to get out. All of this is a trading plan. Patrick is part of our jockey club. We have, to a certain degree, a trading plan. Looking at from our automated trading systems, we have a market timing call, we have a search that we use, we have stops that we use. Whether you're investing or you're trading, everybody in this room needs to have a trading plan. So as Boston says that, written procedures, I look at it more as a trading plan, and everybody in this room needs to have one. And whether you're looking at moving average crossovers, you got to know what you're looking for. Where's your setup? Where's your trigger? How you going to get out? You know what that's called? When to buy, what to buy, when to sell. And that's a trading plan. All right, so that's what I wanted to say. Hey, can you put all three of us back up on the screen again?
Yeah, doesn't Jerry supposed to do something?
Oh, Jerry, well, you're going to talk about your course? You do that.
Yes.
Do that real quick.
That's right. So the EMA squeeze trading system that I showed you guys earlier is part of a new course that Stan Heller and I are delivering here. Stan will be doing most of the work, but he and I, Stan, by the way, is a consultant for VectorVest Canada. For those of you guys that live in Canada, I'm sure know Stan very well. But this is a moving average course. It's obviously strictly dealing with moving average trading systems, but similar to the EMA system. The trading systems that we teach you have very clear entry, exit rules, and not only exit at a loss, but where to take profits. So if you go to www.vectorvest.com/MA, I'm sure one of the guys will type that in the chat box there.
Do you see the screen on your screen?
Yes.
Okay.
Yep. So we are currently delivering that course. Our first live mastery session is tomorrow at, I believe, 2 p.m. Eastern time. I believe it is. It's sometime tomorrow. Audrey says, Jerry, I'll be in that class to hassle you both. Need a refresher. Good, Audrey. It's been a long time. Yeah. So again, guys, www.vectorvest.com/MA to register.
All right. Another thing is, I love that this course is being offered. A lot of people are jumping all over this course. Folks who are VectorVest subscribers, I love the way Jerry teaches. I would definitely take advantage of this course. Just to also back up, Patrick does support the mobile app. If you are a VectorVest subscriber, you automatically have access to the mobile app. If you want to be able to effectively learn how to use it better, tune in every Thursday at 11 a.m. Patrick goes through showing you the tips and the tips of the trade. He shows you how to use it. All right, so he'll walk you through how to effectively use the mobile app. And again, if you are a subscriber to the VectorVest software, if you are a subscriber to the VectorVest software, you automatically have access to the mobile app. Wow, Joey is just, wow. All right, so Joey's telling me I'm not looking at my camera enough, and he accentuated that I needed to do so. So here I am. All right, stop, Patrick, stop. Stop there. Can you put all three of us back up again? Doesn't matter. There you go. Do that again, Patrick. Patrick just scared the bejesus out of everybody by doing that. Hopefully you guys learned some things from a moving average perspective. I think that all three of us brought something to the table a little different. I love having these hot stock panels for that reason. You get to hear not only from one person, but from three different mentalities. And we don't always have to agree with each other, but I love that we can stand on what we believe and how to help you. Three different ways to do that. If, again, you are not a subscriber to the channel, please hit the subscribe button. If you like the content today, please hit the like button. Support Jerry in the courses that he teaches. I think you will not be disappointed by any way, shape, form, or fashion. The courses that he puts together are top-notch. They're really good, and that's why he is the manager of educational content. And Patrick,
easy for you to say.
Huh?
Easy for you to say.
It is, yeah, it is. I know there's a lot of work behind that, bro. I do know. And Patrick and I are both senior instructors here. Patrick does a lot with either the Jockey Club or, again, supporting the mobile app. And that's the mobile app is the Facebook thing.
Tell him it's on Facebook.
I did tell him it was on Facebook. Wow, did I not? Listen, Joey and I are going to fight after this. So I just want y'all to know if Joey doesn't come back, he's going to get beat up. But it is on Facebook. Patrick does a good job of supporting, and we do look at stocks. I have Trending Thursday every Thursday here on YouTube. VV Nation supports me there. So everybody here brings something to the table, and I've been blessed to have both of these as my guest today. All right. Anybody want to add anything else to it, Jerry?
No, I'm good. You guys have a great rest of your day.
Patrick?
See everybody again soon.
So I saw a lot of people.
I knew you were
going
to add something. I just knew you
stocks here. I just want to throw it out there. Once again, every Thursday on Facebook, you go to facebook.com/VectorVest7. That'll take you to our main site, is where we go live at. At the very end of every session, I always save the fan favorite, where we'll analyze any stock that the viewers want to take a look at, and show you how to do so on the mobile app in less than 20 seconds. So for all the people that wanted to take a look at stocks here of their own stocks, tune in on Thursday over on our Facebook page, and I'll analyze those stocks for you. So see you guys there.
All right. With that, folks, thank you for supporting us. Adios, arrivederci, ciao, au revoir, sayonara, salam, shalom, namaste. We're out of here.